There are currently more put options than call options. Could stocks rally another 15%? And how did I come up with another 15%? I'll explain that in the video today. Stocks, junk debt, and equal weight ETFs are all at records. This is showing broad participation. We'll highlight two trades that I received from clients that they actually took, one for FedEx and another for Century Aluminum. Congratulations to subscribers. Gold hit an all-time high, yet both dollar and gold are in an uptrend. Is this uncommon? Yes, but it does happen on occasion. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, March 29th, 2024. As always, please remember to hit the like button, subscribe to this channel, make any comments that you like, and share this video. These are actions that would keep the channel going. Thank you for them. If you are a subscriber, stay tuned. We have quite a busy separate video for the subscribers only. We'll cover quite a bit of various ETFs, as well as large cap stocks like Apple and Amgen, as well as small cap and speculative securities like this ATAI Therapeutics, which is a psychedelic firm. Macys sounds is pretty good. Pattern right now, C4 Therapeutics, as well as many gold related like gold miners, junior gold miners, Fortuna silver, as well as Wheaton precious metals. As always, throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can sign up on my site. You can see them on this chart. There's green, blue, red, and yellow line. And let's get started. So today I wanted to actually get started from looking at market breadth. So it's not even really market breadth, it's more like the activity of options. So we're looking right now at a graph of put to call ratio. So on StockCharts.com it's $CPC. So put to call, puts on top, calls on the bottom. We divide puts by calls. So puts means we're placing a bearish bet that S&P 500 will go lower, or in this case just the total puts, whatever stocks are being traded on the United States markets. So if we have a lot of puts, the idea is that the market will go down. If we have a lot of calls, the idea is the market will go up. In fact, it's actually the opposite. We can see on this chart that the more puts are, the more likely the stocks are to rally. And the more calls are, the more likely the stocks are to actually correct. So, for example, we can see that we had quite a bit of calls here in 2023, February 2023, and we got somewhat a smallish correction. Vice versa, we had quite a bit of calls here in October 2023, and then we got a rally. So, strangely enough, currently we have quite a bit of puts. Quite a bit of people think that the market will go down now. Notice how many puts we have. We have, a significant amount of puts. So we're above this green boundary line, which is just shows like around where in relationship to 250 trading days is the current put to call ratio. But just looking at this chart, don't worry about too much. Notice that right now we have quite a bit of puts, and again, the more puts, the more likely it is that we're going to rally. And you can see that we really didn't even have any kind of, meaningful pullback. S&P 500 was just continuously going higher and higher since October of last year. So if we have this many puts and we barely had any pullback, according to this system, the more puts we have, the more likely is that the rally will happen. So according to this chart, I'm thinking that rally will continue. This doesn't look like we're going to get a pullback of any sort. So let's look at the S&P 500 first on the daily time frame. So daily just means each candlestick is 1 day's worth of activity. If you're using my indicators, this green, blue, red, and yellow line, you can find out more about them. You make sure that the length that you are using is 250. Okay, so for daily charts, use 250. For weekly, use 52. This is a weekly chart, and I will use 52 as my length. See, you can change it. On daily time frame, we had an all-time closing high on Friday. So for now, again, we are keeping all of our positions open. I still have S&P 500 ETF SPY open, half of my position. I bought back in October of last year. Why? Why did I buy there? It's pretty obvious. Okay. We had a previous record high back in July, and then we had a pullback. Where did the pullback take us? It took us to this blue support resistance line. So really that's all I needed to know, is that once the stock dropped below the blue line, we buy it on close back above it. Okay, there it is. You can see we dropped below the blue line and then closed above it right there on October 24th. That's where I bought my S&P 500 ETF SPY. And we're just basically sitting in the position. I did sell half back in January, where I thought this was the top. Clearly I was wrong, because the top is not even in. We continue to make new highs. So what is going on as far as this rally, and will it continue higher? So this is a weekly chart of the S&P 500. So we're going back to like 2021, and normally when we see patterns of such nature, so I'm going to explain what I'm referring to here. So from 2020 into 2022, into January 2022, January 2022, we had a move up, a pretty steep move up into new all-time highs. Then we have a pretty long and sizable pullback that continued into October of 2022, and then another move higher into January of 2024. So overall, you can see that this is sort of like a cup. They call it a cup, but in this case there was really no handle. So usually there is like a somewhat of sideways or down pattern here. But really, in this case, there was none of that. We just broke to new records. Okay, and so to estimate the size of a future move, we usually look at the depth of this pattern, and I'm going to draw it out. So depth of this pattern I'm referring to is from highs in January of 2022 to the lows in October 2022 to the highs in January 2024 this year. So this is what I'm referring to here. And so the depth of this pattern is about 1,200 points. So right now we're already about halfway to that breakout. So if we take this 1,200 points and tack it on to the following the breakout, we're going to end up somewhere in the 6,000 vicinity for S&P 500. Or from today's levels, it's another 15% or so. So this is why I said, can stocks rally another 15% just straight up, okay, from today's levels? And I think it's possible. What I can show you here is that if it's also possible that the stocks will not rest at all, and we're just gonna straight up continue higher. Okay, we're just going to see how this moved from October 2023 into today. It was basically just straight shot higher. Can this straight shot higher continue? Sure. If we get just nothing else changes, we just continue higher, I think somewhere around August to September of this year, 2024, we will hit this target of S&P 500 around 6,000. Another way to estimate when this will happen, I mean, anything is possible. We can also just collapse from here, but generally speaking, this is a good way to estimate the move, the depth of this pattern, and we will duplicate it on the upside. So it took about 460 days or 66 weeks, so a little bit over a year from the bottom in October 2022, so 2 years ago, till January 2024 to break out, to bottom and then break out. So it's very reasonable to expect something like this as far as time is concerned, to be duplicated going forward when we will reach this target. And I think it's April of next year is another reasonable target. But just the way things were going, it could be sooner than April of 2025. Because notice again, this rally has really surprised pretty much everybody under the sun as far as analysts are concerned. It's one of those hated rallies, but it just keeps going. All right, so it surprised me quite a bit. But I'm not really gonna question this uptrend. I am long, and I'm gonna keep long for now. So I'm thinking like the soonest I think we will hit 6,000. This is a very optimistic, extremely bullish projection. We're looking at August of this year, September, August of this year. Less optimistic, less bullish projection is March, April of 2025 next year. And again, anything is possible. We can also, pull back, retest this breakout, maybe, pull even more further down, and then just rally higher. Or we can have a reversal. Okay, but once again, the way this, the estimation for this type of patterns is that once the breakout does occur, chances of reaching the depth of this pattern is quite high. So for now, we're going to keep a bullish bias, keep a bullish outlook, and continue holding long our positions. High yield bonds, junk debt, also hit an all-time closing high. High yield bonds and S&P 500 correlate highly. So this is a correlation coefficient between junk, J and K, and high yield and S&P 500. Notice that it spends most of its time in positive territory. So when new highs are hit, these are all-time highs, together with S&P 500, this is a good sign. It means there is no divergence. Means that both high yield bonds and stocks are moving together. In my mind, it's a good thing for stocks. Additionally, we're seeing a broad participation in this rally. Here is RSP, equal weight ETF, equal weight S&P 500. Notice that equal weight ETF S&P 500 also broke out to new record highs. And then there is that similar pattern that I just described for S&P 500, where we have kind of like a ball pattern or a cup pattern, and now we have a breakout. So the depth of this pattern most likely will be duplicated on the upside. So we're expecting RSP or equal weight ETF to follow the regular S&P 500. But the fact that S&P 500, the equal weight ETF, is also moving higher and is breaking to new records is showing that there is a lot of broad participation. There's a broad participation in the market. In other words, not just the Magnificent Seven are leading the stock market higher, but actually many stocks within the market are moving higher together. Again, this is obviously a good news, and we're going to continue holding long. I wanted to highlight a few trades. This is an actual trade that one of my subscribers took. So on March 11th, right here, I sent an alert out to my subscribers that I would be buying FedEx if I was them. I didn't personally buy it, unfortunately, but a client did buy it. A client bought on March 11th. He bought June 21st 2024 options. So in my mind, it's a little bit close. This is June. So it's about, let me see, April, May, June. So about 3 months out. I mean, it's a reasonable bet. I personally prefer to buy, if I'm trading options, I prefer to buy like a lot further out, like 9 months at least, maybe a year or more out, because I don't exactly know if it's gonna go immediately higher or if it's gonna like meander and then maybe move higher. In this case, we were very lucky and the client was very happy, obviously. So here's what he did, and I'm going to try to explain it because I have people who are not familiar with options tradings, and so this is what he did. So he bought on March 11th. He bought call options that were expiring in June of this year at $270. That were expired. The strike price of the call option was $270. So there's a $270 level or so. And he bought call options for $8.30. So $8.30 implies you need to multiply by 100, and you will pay $830 for one contract. So you have to understand that you need a relatively large account to trade such options. Because let's say you have $1,000 account, you buy $830 worth of options, you have very little money left. Additionally, if the trade goes against you, you will have a gigantic loss and basically get wiped out. So when you trade in options, make sure you size your positions very correctly. You need to really know what you're doing. I do provide training, so sign up. Let me know if you have any questions. He bought options at $830 each. A few days later, I sent out an alert on Thursday, the 21st of March, that our target was reached. Our target is very close. Okay, so this indicator here down below is called ATR, Average True Range. One of my favorite indicators. And ATR simply means how much does the stock moves on average, up or down. It doesn't really tell me how much up or down it moves per day. So on that day back in March 11th, that particular stock, not the option, I'm just talking about the stock here, stock moved about $3.89 per day. Right there is where I'm getting this number. I'm just reading it off. You can read about ATR. It's a very common indicator, average true range. So he bought for $830 one contract, or I don't know how many he bought, but basically each contract cost $830. We only need a movement of about 2 average true ranges. You can actually make it work with 1 average true range, but it's going to be tight. So technically speaking, we actually got much more than 2 average true ranges, because our ATR at the time was about $4, and we got like $11 move. So an option back on March 11th cost $830. When our target was reached, that same option cost $1,150, $1,150. You see what I'm saying? You have to multiply by 100. So he sold. Let me see. He sold the options and made a $320 profit per each. So 38%. You see. In 7 trading days. But notice what happened next day. We had earnings. So I wrote to him. I totally understand not holding through earnings, but the same option cost now $26. So if you held it just a few days later, you would have 214% profit. This is how much the options move relative to stock. So notice that the stock itself moved $15. 15%, so $35. It was like $250 and moved to about $280 or so. However, the option in this case, and remember, this is a very short-term option. It expired only 3 months out. It moved 214%. You see, it's about it's more than 10 times. It's more than 10 times the movement of the stock itself. So this is the type of trades that people do, and definitely a big congratulations, and hopefully we will continue doing this type of trades. Another trade we did, and another thank you from the client just came in. So a client bought this stock. This is Century Aluminum, ticker symbol CENX, CenEx. So Century Aluminum, she bought right there on 8th of February at $10.53. Few weeks later, our target was reached. Again, the target is 2 average true ranges at the time of entry. So at this time, like I'm reading it right there. So at the time of entry, the ATR was about 60 cents, 0.59. So about $1.20 or so is basically where we are setting our target. Okay, so that's about right there. So target was reached. A few days later, she went ahead and she sold 1/3 position, so that's already a nice profit right there. But notice what happened afterwards. CenEx just kept breaking higher, and on Friday it closed at new, I believe this is a 52-week high. Yeah, it's 52-week high. So notice again, very nice move. That's a 46% gain on the 2/3 of the position, and she is still holding long. I wanted to show the same trade on weekly charts, and how does that look on weekly charts, and why did I even bother with this particular security. Why did I like this particular pattern? So I generally like this type of patterns where we have sort of a collapse of a stock. Basically, really nobody wanted that stock. It used to be as high as like $30 back in 2022. It collapsed to $5 in September of 2022, and it sort of kind of traded sideways until it bottomed out here in October. Now, I wasn't really watching it. It wasn't really coming up on my scanner. It did come up on my scanner around December of last year. And then notice this breakout. Okay, so that's a breakout above the blue line, and basically this is all we needed to know. Additionally, what I really like about this pattern is this tight sort of range where I just highlighted it between those white lines. And notice now we're breaking out. Big, nice breakout. We could easily continue higher. So for now, I would keep my position open for CenEx. But I mean, definitely good idea to move your stop up as the blue line moves up. So there's my stop would be at the blue line at this point. Again, big congratulations to subscribers who opened this. And hopefully, again, it will continue higher. Okay, let's move on to the dollar and Forex and gold universe. So dollar DXY versus gold. So usually we're looking right now at let me go gold versus I'm gonna show you gold versus the dollar, and I'm gonna show you that normally the gold correlates negatively to the dollar. So this is gold, and correlation, this is correlation coefficient to gold versus the dollar. By and large, it's negative, but occasionally you can see that it goes into positive territory, meaning that sometimes both gold and dollar move in the same direction. Okay, so at this point, we're looking right now at daily time frame for the gold, and you can see that alert was, or rather, dollar has given us several whipsaws. So first attempted a breakout here back in October of last year, 2023, kind of failed, and we had another signal to the downside. But again, notice how it just bottomed out right around the yellow line here between 27th and 28th of December. This is usually, in my mind, this is usually a good sign. And it continued higher and again broke out above this blue support resistance line. In other words, it became in an uptrend on 13th of February. Again pulled back, and again notice how it bottomed right around the red line. So these lines are not made up, they're mathematically calculated. Okay, there is a formula that calculates them. It bottomed out around the red line and then rallied again. So notice what happened. We just broke out into a new uptrend for the dollar. Okay, we can see the same thing on the weekly chart. We have another we have a weekly breakout for the dollar above the blue support resistance line. This is a big deal. Okay, so dollar has been sort of, basically trading sideways to down, but I think at this point dollar could rally higher. And normally when we trade gold, so gold is XAU divided by USD. So if the USD, the bottom part of this equation, like I just showed you, is going to be getting bigger, stronger, shouldn't it pull this currency pair lower? Okay, gold versus US dollar. Dollar, the lower part of this equation, is getting bigger. It should pull the currency pair lower, but it's not the same. This is not happening. We're seeing all-time highs for gold. Okay, so this does happen on occasion. In fact, I'm going to show you a period where it happened, and that happened not so long ago. Let me see, about just like the last period I'm going to show you. I'm referring to this period right there in late 2021 to early 2022, where we had US dollar going up and gold going up. Okay, so I'm going to zoom in on this chart. So we're looking currently at about September 2021 to about May 2022 time period. Notice gold was going higher. In fact, it topped out here in March of 2022, but at the same time dollar was going higher as well. So it is unusual but not unheard of. Okay, so we do have occasional forays into positive territory for correlation between gold and dollar. What's happening right now, dollar is again in an uptrend, and so is gold. Okay, gold is also in an uptrend. An unusual situation, but not unheard of. So we are buying gold miners. There were several alerts for gold miners, and hopefully some subscribers took the alerts. What are we expecting? I mean, this gold just hit an all-time high. All right, so inflationary expectations perhaps are still high, but at the same time, if dollar is strengthening, wouldn't eventually a very strong dollar weigh on gold? And I think eventually it will. I think eventually we will see, a return to normal correlation between gold and dollar. And more or less normal correlation between gold and dollar is opposite. If dollar is going up, gold is going down. So will we see a gold pull back if dollar strengthens further? It's a very good question. I actually kind of interested to hear what you guys think, especially from a macroeconomic perspective and from fundamental perspective. Why do you think gold is going up together with dollar? Is this a safe haven trade of some sort? Is this due to inflationary expectation? But if inflation will go up, wouldn't the dollar devalue? No, it's not happening. It's the other way around. So we have a weird situation at this point. What do you guys think? Make a comment below. Other than that, that's it for this week's recap. Head over to MasterChartsTrading.com. Click on sign up to sign up one of the products. So I have added the yearly plans So for example, if you want to just get my indicators, so you can get this trading indicators, this green, blue, red, and yellow lines. You can have them for tradingview.com. The tradingview.com interface is free. Tradingview.com is an online interface, is free, but my indicators, once you sign up on my site, I'll open the door for you and you will be able to use them. So it's a $24.95 for yearly subscription, $24.95 per month equivalent if you sign up for a year. If you sign up monthly, it's $29.95, so it's a 17% discount. The same goes for newsletters and indicators. So again, I send out daily alerts on various securities that we trade. For example, this week we've been looking at various securities such as large caps, ETFs, as well as various speculative securities like Gritstone, JetBlue, as well as gold related. So also I send out a weekly members only video, which will be coming up shortly tonight. And I think the best deal, of course, is to get both trading indicators and newsletters. And then if you get the yearly subscription, it's equivalent of $49.95 per month. If you do a monthly subscription, it's $59.95 per month. All right, that's it for this week's recap. Please don't forget to hit the like button, share this video, make any comment. Again, I'm really interested in especially macroeconomic and fundamental perspective. So if you have any comments, make a comment. Thank you for watching until the very end, and have another great trading week. Bye-bye.